The Indian markets, after remaining volatile for the entire week, has turned positive today. The markets were volatile primarily on account of India imposing tariffs on U.S. goods, as well as there has been increasing global concerns, global growth concerns across various markets. So India has also been impacted. Today, the markets have rebounded primarily on account of strong bullish expectations from the budget. The Fed policy has also ended with dovish sentiment, and there's been a resumption in the talks between U.S. and China at the G20 summit. So overall, we have a positive feeling of the market after today. The markets, after touching a low of about 11,625 during the week, has touched a high about 11,931 odd levels and closed the day at about 11,831. So it was down by about 0.69% for the entire week. None of the indices did well in the across the weeks. However, the indices that were strongly negative were FMCG, which was down by about 2.32%, and media was down by about 2.67%. In terms of technicals, the Nifty has formed a hammer candlestick pattern in the weekly charts, which signals a trade reversal. On the daily charts, the Nifty is given a strong bullish candlestick pattern. RSI is trading upwards to about 62 odd levels, whereas MACD is trading above the signal line. So overall, the market could be positive in the coming few weeks, with some amount of volatility that is built in, primarily on account of crude that is going higher, as well as the FNO expiry that is expected in the next week. In terms of the strong bullish reasons for the markets to go up in the coming week, it's about the budget expectations, the dovish stance which the Fed has signaled, as well as the resumption of the trade talks between US and China. We would request you to be stock specific, book your profits. The upside target remains at about 12,000 odd levels, and the downside support is about 11,670 odd levels. Our stock recommendations for the coming week are Power Grid, which we have a buy recommendation with the target price of 211 odd levels, with a stop loss at about 190 odd levels, signaling a gain of about 5%. This stock has been going upwards for the last 4 weeks. It's breached the 200-day moving average at about 192 odd levels. The RSI is going upwards at about 61 odd levels, and there's a strong bullish candle pattern on the daily as well as weekly charts. The other buy recommendation is Hexaware Technologies. We have buy recommendations with a target price of 395 odd levels, with the stop loss at about 364 odd levels, signaling a gain of about 4%. Again, this stock has been moving upwards. It has breached the 200-day moving average about 356 odd levels. RSI is positive at about 59, bullish candlestick patterns on the daily as well as weekly charts, and it has given a new swing high at about 373 odd levels. The last recommendation is UPL, which is a sell recommendation with a target price of about 843 odd levels, with a stop loss at about 900 odd levels, signaling a gain of about 3%. This stock has been going downwards. It has breached the 100-day moving average at about 918 odd levels. There is a bearish candlestick patterns on the daily as well as weekly charts. So that's our recommendations for the week. Thank you.